Hi everyone, in this video I'm going to be covering the whole entire market in terms of the SP500 or SP500, SPY, ETF, Nasdaq, Dow Jones, and then also I'm going to go over the economic calendar for tomorrow. I'm going to go over the Fed meeting minutes, also an article by Goldman Sachs in terms of interest rate cuts, so on and so forth. So hopefully you guys like the video, hopefully you guys enjoy it. If you do, consider dropping a like, it helps the channel, so thank you so much for that. In terms of the SPY, we're at $514. After hours is $513.82, and overall, for the most part, we are moving towards this level right here. So as we saw today, CPI number came out. It wasn't good, higher than expected, and we pretty much dropped instantly, right? That was pretty much at 8:30 a.m. And then we're constantly going down to this level, in my opinion, $508, give or take. Ultimately, I think we're going to be going down because if you look at the 5-year chart, again, within this channel, this dates back since 2010, right about here, bounced off resistance or got knocked down by resistance right about here, this whole entire channel, and then bounced off of support at this level. Now these are just major crashes, so I don't think that's going to happen during an election year, in my opinion. But either way, the first level would be coming down to, hypothetically, if we were to pull down, because again, we were in bullish territory since October 2023, and we might be moving to bearish territory soon, hypothetically. And if that is the case, first level of major drop would be $480, give or take. And then if it were to go crazy, $432. But obviously it's not going to drop like that because there's a lot of support levels, there's moving averages, so on and so forth. So you got to take it by day. But tomorrow is PPI numbers. So I'm expecting another drop tomorrow potentially. There is a chance it could bounce up if the PPI numbers are not higher than expected, but we'll see. I'm going to go over the numbers as well. And then in terms of the Dow Jones, we saw that it actually did drop today as well. Again, it's the same thing. It was in bullish territory. Markets tend to move almost together at the same time for the most part, like in terms of the same movement. Not exactly, but give or take. And we're getting into bearish territories. Now, for the Dow Jones, it's already crossed the bearish territories. This is the 5-year chart, though. So if I go to the 1-year chart, it is in bearish territories as well, which just like the SPY or slash S&P 500, same thing. The 1-year chart, already bearish territory. The 5-year chart, potentially crossing in. So we've been going up the whole entire time, so you could naturally expect a pullback regardless. And in terms of the Nasdaq, it's pretty much the same thing. 2010, right? It broke through a channel, but at the same time it got under the channel again, and it seems like it's stuck once again. So this was back since 2010. Resistance, support, and now we're coming down. Already entered in bearish territory for the 5-year chart, and the 1-year chart, it's in bearish territory already. So are we going to have updates? Obviously, we'll always have updates too. It's not always going to just be negative completely. But at the same time, the overall movement, it seems like we're entering a bearish territory movement. But we'll see. Again, it is election year. I know I forgot the agency, but like there's an agency that steps in to make sure that if there's a crash happening, they kind of like stop it a little bit somewhat with funds. But either way, so in terms of economic calendar, we have for tomorrow, initial jobs claim. So all of this is at 8:30 a.m. Plus we have the producer price index coming out at 8:30 a.m. And again, technically this is like a lagging indicator in terms of if inflation's falling for producers, hypothetically it could fall down for consumers as well. Not necessarily the case all the time, but you would hope so, right? In terms of initial jobs claims, 221,000 previously, expecting 217,000 this time around. Producer price index, 0.6 previously, expecting 0.3 this time around, and core PPI 0.4 and then 0.2 this time around. Now, in terms of what is going to say, Fed, so we have a Fed Gov, Michelle Bowman speaks at 8:45 a.m. 12 p.m. Boston Fed President Suzanne Collins speaks. 12:45 p.m. Chicago Fed President Austin Goolsbee speaks, and at 1:30 p.m. Atlanta Fed President Raphael Bostic speaks. Sorry for mispronouncing names potentially, but interest rate is at 5.33%. In terms of Fed meeting minutes, they decided to hold the rates. They didn't decide to lower it because, again, the CPI numbers came in hotter than expected. I already went over the numbers in the previous video. If you want to check it out, it's going to pop up right about here. But Fed wants more confidence that inflation is moving towards 2%. Target meeting minutes indicate because the inflation number came in at 3.5, right? And they were expecting 3.2, if I'm not mistaken. Previously, though, it was 3.4. So it's an increase from previous time, 0.1 and 0.3 increase from expectations. Federal Reserve officials at their March meeting expressed concerns that inflation wasn't moving lower quick enough, though they still expect to cut interest rates at some point this year. And from the interviews I've heard, it kind of seems like, personally, they're going to probably cut interest rates maybe once, but I don't think more than once. And they obviously are not fully saying that. They're just saying that they want to cut rates, but until the inflation indications show that we're getting to 2%. They don't want to jump the gun for the most part. But in terms of Goldman Sachs, I'm going to get back to the Fed meeting minutes, but the Fed is going to cut interest rates just 2 times in 2024, according to Goldman Sachs. That's what Goldman Sachs states. The bank lowered its rate cut forecast from 3 to 2 following a hot March inflation report. Again, personally, I'm not a professional or anything, but in my opinion, this is just my opinion, I think they're only going to cut it once, if not at all, for this year, but we'll see. At a meeting, at a meeting in which the Federal Open Market Committee again voted to hold short-term borrowing rates steady, policymakers also showed a misgiving that inflation will ease while easing, wasn't doing so in a convincing enough fashion. The Fed current target is benchmark rate between 5.25% to 5%. As such, FOMC members voted to keep language in the post-meeting statement that they wouldn't be cutting rates until they gained greater confidence that inflation was on a steady path back to the central bank's 2% annual target. So they are aware it's going to take some time to get to 2%. So maybe they will cut interest rates one time at least. I think probably to satisfy the markets too as well. That could potentially most likely happen, or most likely will happen. But 2 times, I think that's too optimistic. We have the U.S. 10-year Treasury at 4.546%. And then the significance, by the way, of them, for example, holding rates high, or in terms of Treasury yield, and then them potentially, let's say if they were to increase interest rate, they technically are like, hypothetically, you're taking funds away from investments and stock investments and all stuff, because you might as well just park your money into the bank and get the interest rate return back. And at the same time, in terms of companies investing to research and development and therefore hiring more workers, that tends to not happen as much because borrowing money gets too expensive. So then companies slow down, and then the economy slows down in general. So you kind of want to have a good balance for the most part. Now, in terms of levels for the SPY, so I already covered the Dow Jones and Nasdaq as well, but specifically for the levels, again, moving to bearish territory, if not already hypothetically in terms of short term. But the first level, for the most part, again, there's always constantly support levels, so there'll be like slow levels. But if PPI number comes in higher than expected, then I think we're going to be somewhat consolidating around $508, give or take. And if you wanted to know like the next crazy level, hypothetically, without knowing the next support levels, after $508, if it were to drop down dramatically, we be getting to $482, $483 for this level. Just to show you in retrospect what that is, that's right about here. And then if it were to drop down to the whole entire channel that I mentioned earlier, it would be around 432, 433 when I checked earlier, but it's showing 435. But again, that's way ahead. There's a lot of support levels that it would have to go through. It'd have to go through moving average support levels, or moving averages don't necessarily have to act as support, but they can, and they tend to do that too. So, but first, for the most part, I think it would consolidate around $508, give or take, for the SPY, which is representation of the S&P 500. And that's basically it. Hopefully you guys enjoyed the video. Hopefully you guys liked it. If you did, consider dropping a like. Helps the channel. So thank you so much for that. And I'll see you guys in the next video. Take care. Peace.